I still think there's a little bit further to go in prices. We're moving back into sustainable range. We're really unwinding that undershoot of prices that happened at the end of last year when prices just went down too low.
How much more upside do you think there is then?
I think certainly there's a sustainable move well into the 70s. At Standard Chartered, we're looking for Brent to average $74 a barrel this year, which would imply prices for the rest of the year averaging somewhere north of $76 a barrel.
One of the key uncertainties in the market at the moment is what the US president is going to do on these Iran sanctions and waivers. What do you think is going to happen in that regard?
Up to now, the approach, I think, has been very pragmatic. It has depended on prices. Trump makes it very clear when he feels prices are too high. He's been tweeting that for the past few months. So I suspect the decision will come down to a pragmatic view on what is going to be the impact on prices as we come up to the May deadline for the renewal of the waivers.
So you think he's going to extend those waivers?
No, I think it will depend on market circumstances up to there and that trade-off between, if you like, the politics and the economics in terms of the oil price implications.
What do you think he cares about more, crimping down on Iran or ensuring some downside pressure on domestic oil prices and hence fuel prices in the US?
It's not clear, but I think again we have to step back. I mean, Trump is not the most important factor driving prices. I think we've seen his social media comments really don't have that much impact, sustained impact on prices. So prices have been driven by supply and demand here, not by what Trump is doing or might do. And it's on a supply and demand basis that we do see the need for prices just to rise up into that sort of mid-70s range.
I mentioned earlier that we had a conversation with Ed Morse over at Citi. He says when it comes to this June meeting for OPEC, there's a likelihood that they may not extend the OPEC Plus supply cut production agreement. What's the Standard Chartered view on that? Because the commentary that we've heard from the Saudi Energy Minister, Khalid Al-Falih, and others has been that, yes, they are leaning towards an extension. So what do you think could happen?
Well, I think they will be driven by their view of the supply and demand numbers as they get to mid-year. On our supply-demand balances, we don't see much scope for a large increase in OPEC production to the back end of the year, which would imply some sort of rolling over. But of course, there are a lot of situations between now and then that could come through. Libya is another source of uncertainty in terms of how sustainable its supplies can be. There are various other geopolitical situations. Venezuela's another one. So I don't think anyone in OPEC will commit to the June meeting yet. They will take a good look at those supply and demand numbers, see what happens in May with the waivers, and then take their decision based on that.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.